Amongst big developments between yesterday and this morning, Delhi Chief Minister was arrested late last evening for questioning, or rather after questioning by the ED officials in connection with the excise policy case. Good morning, Niraj. Not market moving, but rather significant development.
Most certainly. Everything related to elections and politics will be very significant.
I like how you've attributed this to elections.
I'm just saying election. I'm not attributing this to elections. I'm saying everything attributable to or important for elections, politics. And macro would help. I mean, there are some positive news flow as well. There is a note from Nomura which says that we may see a transition from El Nino to La Nina. But on the flip side, IT and Accenture, and that's the other big talking point as well.
And a big development, Swiss Central Bank went out and cut interest rates. So that was the first of many.
As did Mexico.
It seems like it's going to be an exciting morning. Lots of different cues pointing in various directions, but nevertheless, let's start with where the implied Nifty is this morning before we go into all those global cues. And then, of course, I'll toss it over to Niraj for what's happening locally as we gear up for trade this morning. That's implied Nifty after a pretty solid start to trade yesterday. This morning looks rather subdued. In terms of stock movements, Asian markets are trading mixed in early trade, except Japan, which is having a good run again. Japanese markets once again have made record highs to trade above levels of 41,000. This comes in as inflation actually accelerated. So most countries or most markets react to a better or a lower reading in inflation. Japan, clearly a different story to tell. Inflation for the month of March comes in at 2.8% versus 2.2%. And the core inflation also continues to rise. Remember, this is the comfort level that the Bank of Japan is eyeing, which is about 2%. That is, of course, what's happening in Asia. The rest of those Asian markets looking rather flat. Across the other parts of the world, it was Wall Street that continued its rally in overnight trade. The Dow, the Nasdaq, and the S&P 500 once again closed at record highs. Financials and industrials led the gains this morning in overnight trade. Apple declined quite sharply as the Department of Justice sued Apple, saying its ecosystem is a monopoly at the expense of consumers. Tech stood out on the downside, and this came in after Accenture lowered its guidance to 1 to 3% versus 1 to 2% versus 3 to 5% that was initially put out on back of a weak global outlook. We'll talk about what this means for the Indian IT sector, but in overnight trade, the ADR of Infosys and Wipro sold off as well. You had the stock media giant Reddit that debuted on the exchanges, opened with a gap up of 38% and went home with gains of nearly 50%. So that was a Reddit story, but apart and beyond that, tech generally having a little bit of a down day. An interesting central bank action you had, just before I go into the other central banks, it was asset manager Vanguard, Niraj, and we've been talking about 3 rate cuts. They've actually come out and said that they do not expect the Fed to cut any rates at all in the current year. So I think while they've said that, markets, of course, not reacting to it. But I'm sure people will take notice as early as next week after all this euphoria dies out.
Yeah, I mean, whether you trust the Fed, and I mean, you know, and most people say don't fight the Fed. So if the Fed is saying that there is going to be a QT reduction and an interest rate cut, then it doesn't matter what Vanguard says.
Let's not forget what the Fed said late last year as well, of course. But then this is just news point. This is what asset managers globally really made of that Fed move. Talking about central banks, very different, unexpected action that took place. Swiss Bank has been, economists were betting on a rate cut from the Swiss Central Bank only in June. But defying that, the Swiss Central Bank actually went ahead, beat the ECB and the Fed and cut rates. That was a big move coming in overnight trade, on back of which the Swiss franc, which is a very commonly traded currency, actually declined. The Swissy dollar pair saw a big move coming in, the dollar picking up strength. You also had Germany, regulators indicating that Germany could now slip into a recession due to weak consumption and anemic demand. England, on the other hand, which is currently struggling with anemic demand, indicated that they seem to be on the right track. In fact, the Bank of England has said that they could look at cutting rates. They're clearly moving in that direction for now. So lots of moving parts with central bank activity. We talked about this on Monday itself, but by Friday, we've had most of those actions out of the way. Bitcoin was volatile. It declined in trade. Crude declined in trade. All of this on back of a stronger dollar needed. So I think the currency markets must be having the time of their life. Very unexpected moves. The Swissy dollar, which is a very popular carry trade currency, would have seen a big big correction on back of the dollar gaining, right?
Yeah, quite interesting as to what's happening there. And yep, Samina tracks this very, very closely. So refer to her for almost any kind of currency moves, really. But let's talk about the trade setup for the day today and try and see what could be happening there. So the global cues, as we highlighted, are maybe okay. The US futures are still in the green, so the implied open could be indicating a start which is flattish to marginally higher, if you will, unless I'm very wrong. But I think that should be the kind of start that we should anticipate. Yeah, flattish to marginally lower, actually. So I stand corrected there, maybe courtesy IT. So lower VIX and global cues, that's the first time on the trade setup that lower volatility and global cues may aid the index, but IT will probably play the party pooper, is likely to be the party pooper, and I think IT has done that, is playing spoil sport, and is probably leading the index lower. That's why the implied open seems to be suggesting. Now, yesterday, the interesting thing that happened was that we kind of closed in and around 22,000, but there was significant call writing at those levels. It's almost as if call writers knew that 22,000 is going to be a bit of a resistance, and I think that is what is turning out to be, because the maximum OI is there and the maximum call concentration also happened at 22. So you would think that if the index were to move higher, these guys would have to come and cover. That doesn't seem to be the case today for now, courtesy IT. Let's see if banking steps up and tries to do something. So that's the other aspect. And from amongst themes to watch out for, and we'll talk about IT in detail, Samina will start that, but the commodity bounce back that we're seeing, base metals, crude, rubber, what have you, is probably denting prospects for commodity consuming sectors. So sure, metal companies like SAIL, Hindustan Copper, etc. may do well. But what about tires? What about auto ancillaries? I think all of those could be under a bit of a cloud, because we are anyways looking at the margin expansion juggernaut coming to a bit of a halt. If there are corrective moves, then it may impact earnings for sure. So be careful on tire companies, on auto ancillaries, and some others which are commodity consuming companies. They might be in for a rough ride in Q4, and if not Q4, definitely Q1 of FY25. Samina.
Niraj, you talked about rubber prices, and I think crude is also a very critical input for all these companies that are rubber, where rubber is a key input, right? So it's going to be a double whammy, and what I think and I'm glad you brought this up, because we've not considered the crude impact from late 70s or mid 70s, so really late 80s. May not be so much in the fourth quarter, but I think it's important for us to take notice that as we go into the new financial year post the fourth quarter, these are things that could once again impact earnings for a company, or at least the bottom line. Tech stocks, and we'll talk about that in more detail. Once again, Accenture is going to lead to a sell-off in IT stocks. This is exactly what we saw last quarter, where the reporting came in from Accenture. It was disappointing. They seemed concerned about the outlook, and that led to the sell-off getting kick-started in the IT stocks in India. This morning, it's no different. Accenture has reported numbers. They've said that they've reduced their guidance to 1 to 3% versus 2 to 5% due to uncertainty leading to clients who are reducing spending on consulting services. And Niraj, I think you might have perspective on this as well, right? What I want to understand is the decline in spend is because of AI and operational efficiency, or is it because companies are actually slowing down? So is this good for Accenture, or is it bad? If there are lesser seats on back of AI, I'm not sure how to look at this, but because that's going to hit your bottom line straight up.
Yeah, so, okay, maybe 2-3 buckets. Yeah. I was trying to go through it. So for generative AI business, Accenture has actually had some great deal bookings, so that's part one.
That's a good thing.
Are clients not coming out and spending? So managed services, that vertical has seen growth which is at a decadal low. And that is the key problem for Accenture. The revised outlook, by the way, is 1 to 3% versus 2 to 5%. Yeah. So that's the other piece. And Samina, you very rightly pointed out, Accenture last quarter also was weak. Cognizant last month was not that great either. So they also kind of sounded shaky. So on back of all of that, it certainly looks like demand is not coming back in a hurry. And you know, there's this note from Jefferies. We kind of quoted some of this day before yesterday when we were talking about IT services on the trade on the editor's cut. But they point out that the Nifty IT valuations at 26 PE, which is a 13% premium to the, I think the note will come up on your screen, Jefferies on IT services. That's the part of my stocks to watch list. But they say that the Nifty IT valuations at 26 PE is at a 13% premium to 5-year averages and 29% premium to Nifty, and that seems rich. So therefore, no reason for Nifty IT to trade at the valuations that it is trading at a point of time when the outlook seems to be so wacky. And the Accenture commentary, Samina, the CEO, Julie Sweet, saying that we see pressure in the volume of our smaller deals, and that's why we have that 1 to 3% guidance for the full year. Unless demand improves at the margin, how will smaller deals improve? And if that doesn't happen, how will the companies be able to give any kind of confidence on the guidance? There's a problem there.
There is a problem, and I think till elections in the US are not out of the way as well, non-committal is big. It's been the key word that we've seen across. So no green shoots, and even in the last couple of weeks, Niraj, I don't think we've heard of too many big order wins apart from TCS that got their regional bank in the US.
Yeah.
We have a little bit of activity on Wipro this morning, but honestly, the last 6 to 8 weeks, it's been quiet. There have been no announcements to the exchanges of any of the Indian tech companies actually winning big orders. And let's not forget, Jefferies has indicated this, that valuations for the sector are still looking rich. So you've got to be selective in this space. You've got to keep in mind that things aren't improving globally, and we've already seen that. So lots of moving parts. So after the dollar, that of course, the losses in the IT stocks in India today may be offset by a stronger dollar, but we'll have to wait and see of how trade opens up for this space. Moving on from IT, so Infosys and Wipro, both those ADRs were down in the range of 1.5% to 4%. These will get gap down in today's trade.
Most certainly. And just that one line before we move that, Samina, the Jefferies note also says that weakness in Accentures, EMEA, FS and the communication verticals has negative read-through for Tech Mahindra, TCS and Coforge in particular. So while Coforge and Infosys are the top ideas.
Yeah, so I was a little confused about that because they said this is a negative for Coforge.
Yes, but there is a negative for Coforge. So maybe the reading might be negative for the near term for Coforge, Techem and TCS. Maybe those stocks react a bit more. I think it'll be interesting to see.
Right, so there's that on the IT pack. That is going to be the biggest talking point in the sector of the day from what we expect. Well, along with that, I don't think we've spent a morning in the last couple of days not talking about Tatas. This morning too, we will do exactly that. Tata Communications, they've approved a slump sale of the digital service business to subsidiary Novamish at 458 crores. It'll be interesting to watch out. There's been quite a bit of news flow on Tata Com as well. Yesterday, there were technical analysts giving a buy call on this one. It'd be good to see how the stock reacts. Niraj, this would be viewed as a negative or a positive. I'm not too sure. I mean, a slump sale of a failing to its subsidiary, potentially a negative, but because I guess there's an approval coming to do that sale, they could be viewed as a positive, maybe because it comes off their books.
Yeah, one that, and two, not a very large sum, and
crores,
that important a business now in the larger scheme of things or what they are trying to do. So
rather insignificant in terms of stock reaction. You've also got Tata Chemicals. Now this is one bad news after the other. Actually, this is the first news that the company has come out and made an announcement which will impact their counter. The Income Tax Department has imposed a small fine in context or relative to the size of Tata Chem, to the tune of 103 crores. Tata Chem will be appealing against this before the appeal against the centre. They expect a favourable outcome on this. Now, whether the markets are going to believe that is anybody's guess, but I would imagine the stock will more than likely get a gap down in early trade. Karnataka Bank, they've also launched a QIP issue last evening to raise funds. The floor price was it's been fixed at 231 rupees. So pretty much at yesterday's close, about 1%, 2% off from yesterday's closing. Prestige Estates, real estate has been in a bit of a slump, at least in terms of stock performance recently. But Prestige, widening its footprints across the country, have acquired a large piece of land in Delhi, NCR, for about 62.5 acres for about 468 crores. So activity robust for Prestige for now, at least, Niraj.
Most certainly. So those are a few things, and Prestige is in news for more reasons than one. Remember, NDTV Profit has an exclusive about the Marriott tie-up as well. That aside, L&T, there's a board meet on March 27 to consider fundraising and a debt sale. So watch out for that stock in the session today in case there is a reaction. Bloomberg learns that Indigo is nearing a decision to order nearly 30 Airbus A350 jets. Remember, plane availability has been a bit of a bummer for Indigo in the recent past as well. But this is the wide body. Watch out for this one. And some brokerage notes before we get into the political development as well. Remember, a few days ago, Torrent Power won 2 projects. Now, Morgan Stanley's come out with a note on those 2 project wins. They say that they expect both the projects to have downside risks on the currently estimated capex, which means capex could be lower for Torrent Power on both of those project wins. They expect both the projects to generate a mid-teens IRR, which is actually pretty significant as well from that perspective. And Morgan Stanley believes that their FY27 EBITDA can see a 7 to 8% upside as both projects get commissioned. Now, Torrent Power has had a bit of a reaction to these project wins already. Maybe, just maybe, there could be some more here. So do watch out. Look at that chart. The last 1 month has seen a bit of a reaction while the rest of the power space hasn't. So be mindful of Torrent Power today. And some other brokerage calls, I mean, there are a clutch of them out there, but the CLSA note on Amber, so yeah, we haven't given you the brokerage here, but I'm reading it out, so hear me out. Amber Enterprises has been raised to a buy at CLSA with a price target of 4,300, but this is a great table, by the way. Indian Bank rated a new buy at Axis Capital, price target of 600. Ceras Sanitary Ware raised to a buy at IIFL, price target of 8230. And Siemens raised to an add at Avendus Spark with a price target of 5101. Certainly, Amber on CLSA, Samina, seems to be pretty strong because a clutch of brokerages are very bullish on that one.
And we've seen that in the stock. The stock has been pretty much on a tear in the last few days. Also, a quick one, I don't know if we talked about this or not, but Sunil Singhani of Abacus has actually gone out and acquired 1% stake in LT Foods. Remember, LT Food runs the brand called Davat. They own 50% of the market share, basmati market share in the US. So this will be an interesting one. And of course, they've also gone out and said that the stock, the company could see a growth of 4 to 5x going ahead. The stock has also done quite well, so there's no questions there in terms of how the performance of the counter has been. If I have to just pull that up, the stock has gone up pretty substantially. 85% is the kind of gain we've seen on LT Foods. It's the first time that Sunil Singhani has picked up stake in LT Foods, and they've said that, you know, with the industry now moving to becoming very brand conscious and demand shifting from the unorganized players to organized players, LT Foods could be a key beneficiary. You track Sunil Singhani quite a bit, Niraj, so...
No, I track everything markets, but yeah,
big one.
When they bought this 2 days ago, when the stock was at 162, since then the stock has actually rallied quite significantly as well.